In this video, I'm going to talk a little bit about credit agencies and credit reports. So let's talk about a credit agency. So for the credit agencies, there are three major or three credit agencies in the United States: Experian, TransUnion, and Equifax. Those are for-profit companies that gather loan-related information or financial-related information that pertains to credit risks and they build reports detailing loan histories, any judgments that have been assessed against you, bankruptcies, all of those kinds of things. And so basically, they are for-profit companies that gather that information, which is then used by lending companies when they are making a lending decision. Now, that does mean that there are what's called soft inquiries and hard inquiries. So a hard inquiry is when someone accesses or some entity accesses your credit report specifically for the purpose of making a lending decision. And the reason why this is an important distinction is because if we have a series of hard inquiries in a short period of time, it looks like a person is trying to borrow a lot of money all at once, particularly if it's for different sources, different types of purchases. And then that actually looks bad for the person's credit. In contrast, that we have soft inquiries. This would be inquiries made by the consumer. So the person wants to pull up their own credit report and see whether it is accurate. Employers checking to see about the financial situation of a prospective employee or perhaps current employee, a background check. So for the soft inquiries, basically, somebody's trying to get a better understanding of sort of the nature of the person involved. They aren't making a lending decision. And so as a result, soft inquiries should not negatively affect a person's credit. But that brings us to the topic of credit reports. So those three agencies, Experian, TransUnion, and Equifax, basically what they do is they build detailed profiles of individuals, including all of those loan histories, any court settlement judgments where they have to pay, bankruptcies, things like that. They put all that information together into credit reports. So for a credit report, it's going to include things like lots of personal information, account information, information about soft or hard inquiries, if there are late payments on loans, possibly different kinds of public record information could be on there as well, like bankruptcies and things like that. And so basically, those kinds of things typically get pulled onto credit reports. Now, if you think about it, one of the gaps that historically occurred was if somebody was a renter, then they didn't have a mortgage, and therefore they didn't have a loan that could be reported and showing a history of payments, and therefore there wasn't really a history of payments to build sort of a profile indicating that the person was good at managing their money and making payments. And at this point, the rental payments, which are similar, but they're not technically a loan, but they kind of indicate something about a person's ability to manage obligations. Rental payments are, at this point, likely included with a proviso if they are reported. So if the landlord or leasing entity is reporting those rental payments, then they could be included on a credit report, even though it's not technically a loan per se. Now, what's important to note is a credit report is not the same thing as a credit score. So a credit report is basically a detailed document detailing all of the pieces and aspects of different types of loans. So how long you've had a credit card, whether you've missed any payments, been late in any payments, what the current balance is, relative to what the maximum balance is. All of these kinds of details are the kinds of things that you would find on a credit report. A credit score is something I will discuss in a subsequent video that numerically summarizes a person's creditworthiness. So a credit report is like all of the raw data, basically, that is relevant to these loans. Now, under the Fair Credit Reporting Act of 1971, the free access to credit reports is required. And so basically, you can access your own credit report. There are some limits potentially on how often you could do that for free, but you can do it. And the reason why that's worth noting is that the FTC, Federal Trade Commission, they they did a study, and that study estimated that maybe about 20% of people have an error on their credit report. And so there's something that was erroneously reported or shown on there. So it makes sense to actually check your credit reports and make sure that it doesn't have any errors on it. Now, it's important to note, very important to note, that if you want to access your free annual credit report, you can get one each per year through the three main three credit bureaus. Those are available through a specific website. So in that specific website is annualcreditreport.com. So annualcreditreport.com. What you should not do is go out to your favorite search engine and just search for free credit report and start clicking on links. And the reason for that is there are all kinds of other sites that will promise free credit reports. And at the low end of the sort of the bad outcomes is they might sign you up for credit monitoring and try to charge you money or something like that. At the really nefarious end of things, you click on the wrong site and they may steal your information. Basically when you're trying to put in information to get your credit report because you went to the wrong site. Okay. So make sure that you are not just randomly going to a site that pops up and search for a free credit report. You got to make sure you're going to the authorized source. And you can actually find links to the requisite website on government websites that say this is where you go. And I think if you go to the Federal Trade Commission, FTC website, and you're searching there for information about credit reports, then that's when you should be able to find a document with a link specifically saying this is where you go. Okay. So basically that annualcreditreport.com is the website that was created by law and it's run by the three credit bureaus. And so it is the legitimate website. It's all the other ones, who knows what they're doing. And I did actually, I had a student one time who called me a little bit of a huff, and maybe it was an email, might have been an email, but anyway, contacted me a little bit in a huff, basically saying, "Hey, that's not you told me to go to. They're trying to charge me money, and basically they just wanted you to know." And I was like, "Wait a minute, what site did you go to?" And he told me. I told him, "Oh, now wait a minute, go back to the information I provided. That's not the site. You didn't go to the right site. I don't know what site what you're doing over there, but that's not what I told you to do." So you gotta be very careful. Okay. Also, so it's kind of worth noting that if you go to if you look at the Consumer Financial Protection Bureau, which was established in 2010, they actually maintain data regarding complaints about errors in credit reports. So you can actually access sort of aggregate information about credit report errors and things like that, and kind of see what rate of errors there's been and complaints about errors and things like that. So let's suppose you access your credit report and you're looking at it and you are maybe finding an error or something like that. So what do you do? Basically, this is going to require a fair amount of work and documentation. So you're going to need to start contacting the various entities involved and documenting and so forth. So basically, what you can do is you can appeal to the credit bureau and basically say, okay, look, there's incorrect information. And what you should do is you should try to address this with the credit bureau immediately as soon as you figure out that there's an error in writing. So make sure you're doing it in writing. And at that point, the agency has 30 days to reply. Now, notice that doesn't mean they're going to guarantee they're going to fix it. They have 30 days to reply. And basically what that means is they have to reply with what the results of their investigation are, whether they determine that you were correct and that it was an error, or whether they believe that they have information indicating that the report was correct. So let's suppose that you send a letter and they do their investigation. They conclude, no, according to what we're seeing, is accurate. Then in that case, what you can do is you can actually request to have your letter laying out your facts, saying that the information is erroneous. Here's your documentation for why that's erroneous. Things like that. You can actually request to have that letter appended to the file if they don't resolve it. So there is an option for you to sort of have a say attached to your credit file as it relates to that. Now, it would also be important to know that you should contact whatever agency or entity, I should say, led to the incorrect information. So, for instance, if your bank has reported that you were late on a payment, and you can show that the money was withdrawn from your account before it was due, meaning you were not late, then in that case, you should not just contact the credit bureau with the information that this was incorrect, but you should also contact the originating financial institution to make sure that it is addressed there. Basically, so that it doesn't get re-reported again as, well, they were late. So you want to make sure that it is correctly addressed. Okay, so basically for the credit bureaus, they are tasked with correcting errors based on the information that they're receiving at some level. So if they're kind of receiving erroneous information, that could make things challenging for getting something corrected, because according to the data that they're receiving, they're showing the right stuff. So that's where you kind of need to work with both the credit agency and also the lender who sent the erroneous information and try to address the issue on both sides to make sure that it's never going to get re-reported. It's cleaned off the credit report. So that's good, but it's also addressed in the lender's file so that nothing is re-reported and the issue is completely resolved. And that's why I noted that trying to repair a credit report is going to require work and documentation. Now, notice that this entire discussion has basically surrounded correcting something that is in error. If your credit report has negative information on it that is fundamentally correct, it just happens to be negative, there really isn't much of anything you can do about that. The one sort of half exception is if there's negative but correct information that's on the credit report, it's possible you might be able to get the originating lender to remove that. And you could appeal to them, the originating lender, and say, is there any way we can negotiate with this if I, make a certain amount of payments on time, or if I make up for a lost payment, or, what have you, is there any way that essentially we could get that removed so you're not reporting that I, missed payments or something. So if there was something that was negative but accurate, pretty much your only recourse is to try to work with the originating lender and get them to essentially come to a new situation in which they aren't reporting that negative accurate information to the credit bureau anymore. So if you have information that is negative but accurate on there, you're just stuck with it until it ultimately drops off after a certain length of time. Okay. Now that does bring up an interesting point, and that is basically if you have some entity that is promising that they can remove bad information from your credit report, but it happens to be correct but bad information, you should run the other way, because that's basically fraud and scams. Because if it's fundamentally accurate information that's on there, there is no way to remove that other than basically the passage of time, where after enough time it basically would drop off possibly, or it would diminish in significance. But if they're saying some entity is saying that they can just remove negative but correct information, that's basically fraud. So stay away from that. Okay, hopefully that helps. Thank you so much for watching, and have a great day.